Good morning, everybody. Welcome to the Flow Show, Monday, the 3rd of June. Another week away. It's a busy, busy one. I'm back in the saddle. Looking forward to getting stuck into things this week. Morning, Kay. How's it going, mate?
Good morning, Ryan. Good morning, everybody. Welcome to June. Yeah, it's going all right. Going all right. Had a weather-wise pleasant weekend, so we are ready to attack June.
Yeah, well, the month has started off very nice, although first day back at work, the clouds have appeared again. Must be me. But yes, and thank you for covering the show for the last few days of the week last week.
Hey, my pleasure, mate. My pleasure.
I hope the boys and girls kept you entertained and were good.
Yeah, they behaved very well. I'm very satisfied of the class. They all get an extra point for good behavior.
Good, good. I don't know what points they are, but they can have some anyway. Right, let's get weighing into it. Over in China, their moves to prop up the auto sector, they're putting forward 6.44 billion yuan for vehicle trade-in subsidies, trying to kickstart that over there, on top of all the housing stuff as well, still trying to get the domestic economy ticking over a little bit. Over in Japan, did you cover the intervention?
Oh, yeah.
You got that one? Right, we'll skip over
the
that
number
one then.
came out right in the middle of the flow show on Friday, so
Yeah,
just to confirm what the Bank of Japan already showed us.
Yeah, I thought you might have had your eyes on that one, so I'll let that one go. We have had Economic Minister Shindo out saying that real growth or real economic growth of 1.3% in fiscal year 2025 is not so unrealistic. That's what they're pushing towards. There's also been reports out this morning that they're going to finalise their long-term fiscal roadmap as early as June 21. Now, this might not be anything too market moving, but it could be because they're going to, list out what they're going to be doing for the longer term with regards to fiscal measures, which is going to obviously potentially impact or will impact what they do with JGB sales and auctions and the like, which will also impact what the investors do with those JGBs and what the BOJ does with its holdings. So it could have some ramifications, but that won't be coming out till June 21st if these reports are to be believed. So we'll have to wait for those to see if there's going to be any impact from that. Speaking of bonds, there was a quarterly bond market survey from the BOJ saying that the bond market function index improved for the 5th straight quarter. So that's obviously good news for them in what they're doing with all their QE, QQE, and all the rest of it in light of them hiking rates. So again, a lot of eyes, as we've been speaking about, on the bond market over there, just to make sure that it functions well and what investors are going to do with it if yields continue to rise. Any thoughts on that lot, Kay?
Not really. Kishida already said that they are not planning any tax cuts, right? So that is something that should be known, unless big surprise. I think they are going to try and get as close as possible to a neutral one. Whether that's possible, that depends on how much income they will have had. No, I haven't read up on it either. It's one that came out over the weekend. I perhaps need to look at some data somewhere if I can find them. But no big assumptions on that one right now. It's just that we heard on Friday the Bank of Japan keeping their bond scheduled buying unchanged for the month of June, which is, we know in May they reduced it somewhat versus the prior months. So this is now the new scheme, which sort of, but perhaps not completely, covers all the redemptions needed. So keep an eye on. They so far haven't done anything above 1% in the 10-year JGB specifically. No unscheduled one, so that's leaving the door open to a bit of speculation on the monetary policy side. But to come back on the budget, I don't know yet, is the short answer.
Yeah, thank you very much, mate. No worries. Right, over to a bit of data that we've had out, and it's been manufacturing PMI day so far today. Over in Australia, PMI there improving by a pip, but staying in the negative. In Japan, it dropped by a pip, missing expectations, but it stays in the positive. China as well, seeing a pip improvement over expectations, 3 pips up on the prior number. So good news there. Spain shining brightest amongst the Eurozone nations as well, the major Eurozone nations, coming in at 54.0, well up over the expectations and last month. Switzerland as well, bit of an improvement there, still negative though. Italy let the side down this month, that dropped to 45.6, so quite a chunk down, missing expectations. Were expected to go up, but it went down. France as well saw an improvement over last month, but a miss of expectations, again a negative reading. Germany came in all unchanged over a flash number. Then we get into the pan-Eurozone number there, 47.3, so just a little dip over the flash number, 47.4, but still an improvement on last month. The UK as well, given a pip back in the final number versus the flash estimate, 51.3, but still confirming that move into expansion. So the PMI data, not offering too much for the market there, and certainly nothing really ahead of the ECB for the Eurozone, although all bar Germany have seen higher price pressures in this data. So still seeing some heavy price pressures coming in. So that's why we had those warnings from the ECB members that inflation might bounce a bit over the next couple of months. And obviously we saw that on Friday as well. ECB Centeno, looking at last week's inflation numbers, said that the May inflation acceleration is only slightly above forecast, but that still allows us to start the easing cycle. France had their long-term rating lowered to AA- from AA. That was on their deterioration of a budgetary position. The outlook remains stable. That's from the S&P. There were a couple others as well. DBRS changed the Spanish trend to positive, confirmed its rating at A. They also confirmed Germany at AAA in a stable trend. We also got the PCE data from the US last week, all pretty much bang in line with expectations and last month. So no change to PCE there. So still keeping the stickiness, shall we say, in the inflation numbers over there. Income and spending numbers, a little miss on spending, but pretty much as expected there as well. Over in Canada, we had GDP data, which came in a little bit softer, although the monthly number came in at up 0.3%. The Q1 data came in at 1.7, missing expectations at 2.2, but it was up over the prior reading as well. So that was the annualized number. The quarterly number, also a little bit of an improvement. And as you can see, they logged in the March number as well, came in flat. So a little bit mixed on the data there. After the PCE data, Fed swaps still see at least one rate cut for the Fed in 2024. But over at the BOC, chances for a June cut this week, because their meeting's on Wednesday, has rose to 80% from 66%. That was sitting before the GDP data, so the market taking a pretty dour look at that. Kay, we've ramped up. It caught me by surprise when I was looking at the BOC. I wasn't expecting expectations for a cut this week, but it's really ramped up significantly since that inflation report.
I think it's a combination, Ryan, of everything that we've seen over the past week and a half, 2 weeks, and perhaps that lower GDP print, which is still Q1. I mean, we are entering the last month of Q2, so it's still a bit backward looking. But I think it just added a little bit to the expectations. You know, But it's a combination of everything that we saw over the past couple of weeks in Canada. So, well, I've been talking about it on last few flow shows of the week. I think it is possible that they go this week. It will be a how shall I say, touch and go to do it. But I would assume, because there have been one comment, if I recall correctly, that the high rates are starting to weigh on people, and that they're a little bit worried about all of a sudden immigration becoming an issue for the jobs market and stuff as well. Even though it's not their mandate, but they could actually go this week. But I think the expectations, as we were wondering, I think it's just a combination of everything. And also, the combination of their inflation not going up, where the rest of the majors are remaining extremely sticky. So it's a bit of a, what sometimes, and I have to come back onto it, where personally I think I need to come back onto it. Sometimes we're talking about, pricing in this and pricing in that. Well, when a market sees divergences between the one and the other countries, they move their bond book a little bit. Well, we translate it in pricing in this and pricing in that, but it doesn't mean when you go from 66 to 80% between brackets expectations also, or pricing in, that it's a done deal either, right? So
Yeah.
we always have to be a little bit careful about it. I do think that, according to how I heard the McLaren being a bit cautious as well, and there is a possibility they go this week. And is it completely priced into the Canadian dollar? That remains to be seen. We've had a bit of dollar selling and Canadian dollar buying towards the end of the month. Now it's starting to correct a bit. I think it is possible. I did buy a bit of a dollar CAD call instead of, well, I have a little bit of cash right now, but nothing that's going to hurt anything. But I think it is a possibility, and that perhaps the Canadian dollar could suffer a little bit on the back of it.
Yeah, as I say, I saw the expectations, and these ones saying 80%. It seems a bit high. I mean, they haven't really been indicating that, any sort of timeline for cuts, only that they're potentially getting close. I think it was beginning of May, Macklem came out and said they're getting closer towards cutting. But is the market swung a bit too far, do you think? Might it be more of a 50-50 outcome?
Well, if you look at if you take for let's say at face value pricing in 80%, so I mean there's only 20% risk if you take the other side that they do not go. That may be a bit overpriced. But then if you look at what's happening in the value of the Canadian dollar, for instance, there's not too much priced in there, right? And while we are chatting, I'm looking at volatility, and if you look at the weekly volatility in the dollar CAD, is still below 6%. If you look at the weekly volatility in stuff like Euro CAD, that covers ECB and the Bank of Canada, we are below 5.5%. So I don't think the currency market is really over ecstatic about the prospect of them, or perhaps still saying perhaps they won't go,
Yeah. And I think, we've been saying it for months. We're only arguing over the calendar here, not whether they cut at all. So, I mean, dollar CAD's not doing an awful lot. It's been in a pretty tight range for quite some time. So, I guess we'll have to wait till Wednesday, see what Macklem pops up with, whether it is a bit more. I think if they do cut, that might see a bit of reaction. But I think it's also whatever forward guidance we're going to get. Is this going to be followed up by a quick cut, or is it going to be a one and hold, and wait to see what else is coming? So lots to come for that one.
Yeah, I think the new word now for the central banks, even those who start to cut like the ECB, I think the new word's going to be cautious, and that's going to be the new word. We've changed the terminology over the pandemic a few times. I think now it's going to be cautious, and same could be said for the ECB, of course. The data that we got last week are not of the sort of ECB embarking on a major cutting cycle month after month, or meeting after meeting, right? So there as well, I think we have to look at June. That would be a crime if they don't cut, because they all virtually announced it. And but then July is by no means a done thing, right?
Yeah, yeah. I think after that CPR Friday, it's even less of a done thing for July.
Definitely.
And they're going to be cautious about it all the way down. All the central banks are going to be. But anyway, we know roughly where the ECB's at. We'll know where the the BOC is going to be at on Wednesday. So, but we can dig into that in a bit more. TD Securities certainly see them cutting rates at their June meeting. They had their timeline a little bit later out in the year, and they've now slapped it back into June. On the geopolitical front, we've had all these elections dropping over in Mexico. They have their first female president there, sweeping up with a big majority. Claudia Sheinbaum picked that up over there. Donomex has been on a bit of a tear since all the results have come out. So it doesn't look like the market's taking it as business as usual from that election. The party hasn't changed, still the same party. There has been some commentary, talk, whatever you want to call it, analysis about it, that the majority, certainly something I've heard, that the majority may lead to more state involvement in things, right? So less private involvement, which is obviously not good from an investor standpoint and a foreign investor standpoint. So that could be one of the reasons. But and Kay, you've heard some other bits and bobs as well.
Yeah, that's absolutely it, Ryan. The investors are not looking at the because they are steering into a majority now, in an absolute majority in Congress, and that means that some of the unpopular reforms or injections or back into Pemex again, and on the other hand, concessions being taken away from foreign investors. That is now a chance if there is like if that opens a bit of a naughty box there in Mexico. Now we haven't really heard what she is going to do, so this could again be one of those situations where the market goes all panicky on the mix. We have seen those kind of moves in the past, and then all of a sudden says like, well, actually she won't completely derail everything, and then coming back. But it's a bit of a dangerous one to stand in front this one. Yeah, as yeah, we've been discussing that last week as well. This was the possibility. It was very quiet this morning in Asia, extremely quiet. So I thought like trade that euro makes resistance around 1850, but it just rammed through, and I very quickly let that one go, and not going to stand in the way of this train right now, because I still want to see what the first day of trading in the Americas are going to tell us about the Mexican peso. That should be an interesting session today.
Yeah, and a big level we got here at this 1740. We've been here before. Take out that big old spike move that you can see there. This has been a real doozy of a level when we were coming down, and then after we broke it, and we've been above and below, as you can see. It's very, very solid resistance. But coloured lines don't give a monkeys about political ramifications and what investors want to do. But just one to keep an eye on. If we break above there, then we could be looking at 18s not too long after. We shall see. But keep an eye on that one if you're trading the MEX. Over in South Africa, the ANC won the overall election, but its majority dropped to 40.2%. The DA Democratic Alliance pulled in just under 22%, and the MK party just came in under 15%. Obviously, that's the party that Jacob Zuma's now taken charge of, and a lot of eyes were on that. What's happening over there now is they are looking at coalitions and whatever, and it looks like an ANC-DA alliance coalition is likely to be favoured. What that means going forward, they still need to fix the problems that have been plaguing South Africa for a long while. So we had seen the rand gaining a little bit, but overall it's not doing an awful lot. Okay, I'm wondering how long before the election goes into the rearview mirror and it's back to business as usual and the problems that they've got over there.
Yeah, we still have to know who exactly it's going to be. I think that keeps enough of the uncertainty. But yeah, again, election promises, we know how much they can be or not be worth. They said they were going to sort out all the ESCOM problems and Transnet problems, but that remains to be seen. Still South Africa. Yeah, and then that little feat of their geopolitical stance, which is a lot closer to Russia and China than what the West would like. So I think there's a bit to at play as well. Yeah, I think we've seen the reaction to the market. It's lukewarm. It's of course. Yeah, I think we really need to see, and prices will tell us over the course of this week, probably already. I'm still reluctant to buy the positivity of it. As I've been saying, I think it was before when we had this move down to 18. I think that was a big hopium trade, which we now can see the reaction afterwards. That we're just coming back to where we were before. That understands that we are trading still a weaker rand, in my opinion, overall.
And Matthew's popping up, just saying the Parliament needs to sit within 14 days. Yeah, that's correct. So they've got to get all that sorted out, the coalitions and whatnot. And yeah, there is still significant uncertainty. So it could be a bit of a wild ride until we get confirmation of what's going on. If there's no coalition, then that's going to potentially cause some waves. So I wouldn't be surprised to see this shooting higher.
Or if there would be one major surprise is that Zuma comes back into the frame, then I think your dollar rand is trading 20.
Yeah, most likely. So, yeah, if you're trading the rand, don't take your finger off the pulse for this one just yet. Right, that's all I've got on the headline front. Unless there's any bits and bobs you've got from last week or anything, Kate?
Oh, not really. Well, I mean, some may find it funny, but the two best buddies are in a little bit of a pickle over the what is it? The pipeline. China is trying to charge Russia too much for Russia's liking for a new pipeline coming in there, and so they're playing a bit of a hard ball with Russia. I mean, I'd say it's coming from the Chinese. It's only half a surprise, but yeah, that one is perhaps one to keep an eye on. And then China it's not looking great around Taiwan. They've done their military drills over there, and there's a lot of heated comments now after the Taiwanese elections. So we need to keep an eye on what's happening on that side of the world as well.
Yeah, very much so. Right, let's have a look. Morning, Ali. Hope you're doing all right. What are you up to this week? Your long dollar yen, 156.80. So you're looking okay on that. Another short in euro sterling. Well, the other side too, a lot of people at the moment, Ali. And where's it gone? There we go. Euro sterling is still holding the line, just about. We've had a couple of little knocks below, but it's still holding. Seeing a little bit of a push up today. Doesn't look like we may go too far, though, given that we've got the ECB coming up. Market's going to want to think about that. Kate, your early thoughts on the ECB? There's no real reason to sell it unless there's a surprise indication that July's a live meeting. They've pretty much told us for the last 3 months what they're going to be doing in June. So is there any situation where we see a significant drop in the euro?
Significant.
From the ECB side.
Look at the differentials and the option votes. I mean, if you want to have a judge of how nervous the market is in the euro and in the euro dollar particularly, I would say they're not. So you know what I think? I sold a little euro on the spike pre-fixing, but that was already in the plan anyway. But I'm not looking for anything. I already took like nearly half off on this little move lower here this morning. You know what? I think we may have a gentle slide perhaps into the ECB meeting because they are going to cut. But then, yeah, as you say, exactly. I mean, is the door open or closed for July? And I think the risk is that it's closed. And then you could actually see a little bit of a revival. Now, on beforehand, because we're talking about ECB, on beforehand, we can't forget that we have, and I know it's manufacturing data, but we have the ISM manufacturing out today, and we also have the jobs reports out this week for the dollar. So I, for one, am not going to go with any large positions in any of those data because get weaker ISMs in for the dollar. The dollar could get a little knock on the head, you know, into the job report as well. So I'm extremely cautious for the early week trading. And then, as I said, for the ECB, it's exactly as you say, door open or closed for July.
Yeah, very much. Well, let's have a look at what data we've got coming up this week. Tomorrow we got some Swiss CPI. They've got their meeting this month as well, so that'll be closely watched to see what they're going to do with rates. Any expectations for SNB?
The date. Well, I don't know. Nobody knows the CPI tomorrow. If that comes in much lower than expected, it's going to up the expectations again for the SNB, and the SNB will be deciding on the 20th of the month. This being said, all the April data that we had so far signal an uptick in activity, and as I've been saying last week as well. I'm getting a bit cautious with short Swiss. You know, I tried it on Friday evening on the sterling Swiss, but it's going nowhere, and I've let it go. Those activity numbers starting to tick up in Switzerland, and we had, and that one you missed, I think, on the evening of Wednesday to Thursday, if I'm not on the night, Wednesday to Thursday, if I'm not mistaken. Jordan finally came out with the first warning shot on the Swiss franc, right? That saying that a bit of a message to the market, don't destruct everything that we have done. And that coupled with those activity data starting to go up, it's going to be interesting to see what happens on that CPI. So I'm starting. We did come a long way, and I've already said that before. We did stop on serious levels in the dollar Swiss, in the euro Swiss, in whatever currency versus Swiss. So yeah, a bit cautious here on the Swiss franc right now, because if we confirm an uptick in the activity in Switzerland, where most of the Swiss companies have complained because of the strong Swiss franc very loudly, but if they are starting to be happier again, perhaps there's not too much reason to be very short Swiss anymore. I think it's only a warning shot by Jordan. I don't think he's ready to press buttons or any of his colleagues, since he's nearly on the way out, to start to actively buy Swiss again. But keep an eye on that CPI data tomorrow.
Yeah, definitely, mate. CPI is expected to actually rise, as you just saw there, a couple of pips. So we'll keep an eye on that one. Factory orders and jolts from the US tomorrow. Jolts, obviously being jobs week, will get a bit of attention as well, though it lags by a month. But we'll get to see whether vacancies are coming down still. On Wednesday, you've got some GDP data from Aussie, but again, we're talking Q1. So, that's nearly done in Q2. So probably not going to take a lot to look at that. Then we get services final PMIs coming through from around the globe as well, through Europe, Asia, and the UK, and then into the ADP number, the aperitif, shall we call it, for the NFP on Friday. Then we've got the BOC coming out. Now, this isn't a monetary policy meeting or anything like that. So it's just going to be a statement and whatnot. No press conference or anything like that. Then we get the ISM coming in later on. Services, that will be the big one. Keep an eye on all the components for prices paid and employment as well. Thursday, it's really going to be all about the ECB number, but I'll be keeping an eye on that Challenger layoffs number just to see if those numbers have been picking up of late, coming in some quite hefty 80s, 60s. So that's picked up. So we'll, again, that'll play into Friday's jobs number. Then we get the ECB, and we'll be listening to Lagarde waffling on as well after that. And then on Friday, a few bits and bobs out, but the main number is going to be the NFP, and it's double bubble with Canadian jobs as well. So that could be the first big test for whatever the BOC say on Wednesday regarding forward guidance for rates. We'll get a little bit of those expectations getting repriced probably over that jobs data, whether it's strong or weak or whatever. So that's our numbers for this week. And on Wednesday, I need to point out as well, we get the first wages and earnings numbers from Japan for April. So maybe a little bit of an early look to see whether those wage hikes are feeding into the broader labour market. So that might be something just to keep an eye on if you're trading the yen for that one on Wednesday, early Wednesday morning. Ali again asking, markets nowadays sideways with the dollar. What do we both think? We're in this period, and we've been saying it a while. We're in this period now where we're coming off a big shock, if you like, the inflation shock. Let's call it that, and we're heading towards policy coming down to normal levels, or where central banks would like it at normal levels. So it's really, let's take a clearer chart. It's really all about context, Ali. If we come into a short-term chart, you can see that the last, we've been in a pretty tight range. We've had a little bit of a bounce in April. Now we're going sideways a bit. Take a bit of a wider context, come out a bit, and you can see we're in a bit of a downtrend. That's happened after we got that bounce late in the year. So a little bit of a downtrend, but overall, take it over the last 2 years, we've done nothing but go sideways in a pretty tight range. So that's your next bit of context. So come back a bit further, and then you've got all the what happened with the inflation boost and rates being hiked in the US and whatever. So a big move there. So yeah, we're seeing sideways action going on. So you shouldn't really be looking for any big trends. The only real big trend is if the dollar really starts suffering because the economy really starts suffering. We've been talking about soft landings and whatnot. So if the Fed is going to be forced to suddenly start cutting pretty quickly, you're going to see a big reaction, a big sell-off in the dollar. We'll probably be seeing something euro dollar probably going up towards 115. I'm thinking that. But in the meantime, yes, with volatility is down, as we've been speaking about. And so if that's the case, you're not going to see big moves. So again, keep your expectations grounded, okay? Even with the ECB, we might be lucky if if we get a break of 109. Otherwise, unless there is anything really dovish from them, and even if it is dovish, we're probably only going to see a limited reaction downside in euro dollar. Certainly wouldn't think we'd be getting down to 105s unless they say they're going to cut 5 times this year or something silly like that. So yeah, the market at the moment is, there's no real trends. We're just doing a little bit of sideways action, and so you got to factor that in to your trading at the moment. Do you see anything, Kay, that is going to kick us significantly?
Well, I think employment is important. I've been saying it for a while. I think employment is important. Any cracks will probably see a bit of weight on the dollar, and in turn get a great report again out of this week. the dollar may gain some back, but I agree on the back of the ECB and the euro dollar. All else equal, you have already to get below 108, and then 107 will be waiting, and then 106 will be 6.5 will be waiting, or that 106.70 level. Yeah, I think we really have to, unless we break, you don't go with a break. And if we break, I think there's going to be, well, at least you may miss the first 20, 30 points or so, but there will be time to get into it, because then a break should be on the cards. And that, I think, will especially be if the US data start to deteriorate, because we all know the market loves to sell dollars, and
Yeah.
if you give the dog a bone, he will chew it, you know.
Yeah, it feels like the market's still trying to chase when the Fed will cut,
Mhm.
even though it knows it's going to cut. It's still trying to chase it, because it's, we talk about pricing and how you think currencies should move, but here we have an ECB just about ready to start its cut cycle, and a Fed that is seemingly staying higher for longer and reducing the amount of cuts this year, and euro dollar is still remaining pretty upbeat. You'd expect it, if it follows the rule of thumb, to be weaker on the back of those central banks. But it just shows you that, as I say, the market is happy with where it is with the ECB,
Yeah.
but it's not so happy yet where it wants to be with the Fed. So until that situation gets resolved, and as you say, Kay, and as the data starts, shifting that way more negative, so the market suddenly goes, "Oh yeah, see, we told you so."
Oh.
Yeah, and if that happens, yeah, we
The
probably
day the data markedly weaken in the US, I think I'm going to turn Twitter off, and I'm going to turn everything off. They're just doing a flow show for an hour or three-quarters of an hour, and that's it over the day. I'm not going to read anything else anymore.
No, sounds like a good plan, mate. Sounds like a good plan. But yeah, we're here to trade whatever. So if these are the conditions, Ali, if we're not going to get any big trend moves, then you know what to do. You train the ranges. You get through this week. You see where we finished the week. We've got US data, central banks. So, there's euro dollar, there's loonie, there's all the crosses to look at, and see how the line drops after. But take from the central banks the overriding view, because that's going to be driving a lot of the move. So if the ECB is, quite dovish, more dovish than the market is expecting, you're going to see the euro sell off. But is it enough to break 85 in euro sterling? Is it going to be enough to get us back down through 108 or down to 107 or more in euro dollar? If not, then you've got to think that you've got to stick with the trend that we've got at the moment. The short-term trends are clear from the charts on that. Kate, do you want to have a quick butcher's around?
Yeah, why not? And okay, I'm going to start with the dollar CAD, right? Because we do have Bank of Canada out this week, so I'm trying to keep it simple here. Let me just go a little bit wider. As we can see, we've been trading along here, trying to break out of this triangle, but it's still very undecided. So I'm going to rather look at those little bit wider levels. On Friday, we had a little look below this 136. I think it's yeah. On Friday evening, we went down to low 136s, and now we're starting to bounce again. Or we bounce just to somewhere in the middle of it. I think the 136.60 is a relatively okay level to keep monitoring, because if we start to retake it, I think we can gradually into the Bank of Canada, get back up into somewhere in the low 137s. I don't think that there is too much reason, unless we get extremely strong US data, to take it up anywhere close to 138 or so. But it is a possibility that we just continue to actually trade this range, and perhaps I should take this line away above this major support here, which is 135.90, 136, call it. and below what should be a pretty decent resistance now, which is the 137.35.45. Okay, so I'm expecting the dollar CAD to hover in around in that region for now. I'm a little bit on the more weaker side of the Canadian dollar right now, but very, very selectively. As I said, I do expect perhaps euro dollar to just gently drift lower towards this 107.90, 108, the figure again, all else equal. Okay, I mean, unless you get like weaker data already this afternoon on the PMIs, and I would say that keep an eye on that on that ISM stuff because usually it has the tendency of moving a bit more perhaps than the S&P Global or the other one. They change names, right? PMI. So keep an eye on those ones. So a bit of a gentle slide lower because ECB is going to cut. That is in the possibility, barring bad news out of the US. Okay. You know, I've told you about this level in the dollar yen, and it's still being respected. We tried again at the end of the week as well to get a little bit higher on the dollar yen. We are still struggling with the 157.65, 158. Okay. So that is really one that on the top side should now be monitored. The yen is actually regaining some strength this morning. Could be just because we are the budget in Japan, but as Ryan already mentioned, we are going to have those wage numbers in the in Japan, and before that, we will have tomorrow a 10-year JGB auction. So there's two things that can actually move the yen a little bit, especially those wages, because there's been so much talk about those wages. They should be high. So look at the real wages, what they are doing. If they come out positive, then I think it may be a positive one for the yen as well. Okay, so that is what I would say. If they come out and it's a bit of a disappointment, then I suspect that we are going to retest this 157, call it 65, 158, okay? On the downside, we have seen we are stopping around. That's our first stop here, 156.5. That's the first one to look. But I'd say, if anything, market moving for the yen or positive yen would come out, I think we really will have to look at what's happening in the low 155s for a real measurement of can this move now start to roll over. The longer term move, can it start to roll over and do some more corrections? And then I'm thinking, of course, about 153.5 in the middle, but can we get back to that big 152? So this week could actually be somewhat of a driver to tell us if there is a chance that we are going to get this move back down. So an interesting watch, I think, this week on the Japanese yen. All right, especially that the market is acting a bit positive. What I also think that is happening right here and now is people getting out of carry trades, and the MEX yen has been apparently an extremely popular carry trade, and the MEX getting hammered may have to do with the yen picking up speed as well today. So don't forget, we're not only trading dollar yen or euro yen or sterling yen or whatever. We are trading stuff like MEX yen as well, right? So keep an eye on what's happening to the Mexican peso because it may have an impact on your yen pairs as well. Quickly on the antipodians, they're doing okay on the crosses, but they are struggling with their levels. And again here, starting the week, keep an eye on what's happening. 66.60, 66.75. I think if any US data tell us to be short dollars, if that 66.75 go, I think we can start to move higher again. Against that, we are seeing copper rallying a bit on what people say is on the back of those little bit better Chinese data also, but I don't know. It's a bit clutchy at straws, I think, as well. But anyway, copper is doing okay. So Aussie is doing okay on the crosses, bit undecided on the dollar. Kiwi, the same thing. Although we had like spikes above, you know, my zone here, 61.45, 61.55, and every spike above has been rejected so far. So this is one go above, hold above, and that's probably going to be the dollar telling us. And then if you hold above, then I think we're moving into the 62s. Otherwise, range 60, 85, 60, 65, 60, 75. Those are support levels. Only if we start to get below 60, then I think it's going to be extremely dangerous, of course, for the Kiwi. But that's already a pretty big move. I think the more possible thing is range trading, unless they get support from stuff like this. And this Euro Kiwi, people in the room know that I'm trying to see if we get this break of the 176 2040 zone. It has held a few times, many times actually. A little bit like your 85, but I wouldn't qualify in Euro sterling, but I wouldn't qualify it as such yet. But this looks to me like those bounces are getting a bit dead cattish, and I wouldn't be surprised if perhaps even before the ECB, okay, providing the commods are holding up, that we see a bit of a move down to this mid 175s where I'm going to be happy if that really happens. But keep an eye on this 25.35, 2040 zone on the Euro Kiwi. Euro Aussie, less of a clear-cut move because we are in this triangle here. But if we start to get back below 163, we could see just tests of those prior lows. I think with commods holding up, it is a possibility before the ECB that we get back down to those low 162s in the Euro Aussie. I think it's a possibility for as long as we stay below that famous. This was a little bit of a panicky spike there, but I would say still 163 half, 3/4 or something is the top side to monitor over there. But it is just possible that we slowly slide to a bit lower levels into the ECB, and after that, all bets off, and a new market will start. And with that, back over to you, Ryan.
Thank you very much, mate. Yeah, I think we'll call that a session for today. Get set up for the week, and lots to get stuck into, as we've already said. So have a great week, everybody. Hope you trade well. Hope you make lots of pips. Thank you, Kate, as always. And we shall catch you tomorrow. Have a great day, everybody.
Welcome back, Ryan, and have a good week, everybody.
Thank you, mate.